to come together, sisters in TOCI, getting the learning and knowledge we need to be better and to do better. Lord, we ask that you will take control of today's deliberations in the name of Jesus. We receive utterance for our speaker and we receive understanding for ourselves, the listeners as well, in Jesus' name. In Jesus' name we have prayed. Amen. So in the last few months, the Nigerian government has been talking about or has made a law about tax. They have made some modifications. They have tried to harmonize LIRS and IRS, and there is a lot of talk about what it means for every Nigerian. Some have been true, some have been a lot of confusion. So TZELEL Consulting has come up today as a member of TOCI, a member company rather, of TOCI to shed light on the new so that we will not, rather, we will be winners. So what or who is TZELEL Consulting? Consulting is a financial consulting that works closely with business owners, want strong control over their finance and clear insight into how their business really perform, help put the right internal controls in place, simplify and optimize financial processes, keep books accurate and ready. Beyond day-to-day, we provide practical, advisory support that helps owners reduce risk, improve efficiency, and growth decisions. We are not loud about what we do consult talking. Our work speaks in better, stronger systems and businesses that run with confidence. So today, TZELEL Consulting is here to make us Nigerians who with confidence, who know their rights and what is accrued to them. Please put your hands together, that's electronically, for our consultant this evening, TZELEL Consulting. Please put your hands together and make her feel welcome. I can't see anything in the chat. I thought we were here to learn. Let's make her feel welcome.
Okay.
Over to you, sis.
Hello, everyone. Good evening.
Good evening.
How are we all doing? Okay. So
Doing great.
today
Welcome.
um we want to talk about the Nigerian tax law, but is an end to a means, if I'll put it that way. However, um I think I'm going to need hosting rights so that I'm able to share my slides with us to be able to project my slides. Please, if you can give me hosting rights or co-host rights as well.
Done.
Thank you. Okay, so yeah, if you see me looking between, it doesn't look like I'm looking at you because I have two screens. Right. But I mean, let's talk about, you know, taxes. Um, our, our topic today is January 2026, compliance or penalties, your choice, right? However, I do know that, please, let's be focused, right? I see that the chat box is buzzing. Before we talk about taxes, right? Because taxes only exist because a company exists. So let's talk about the company first before we talk about the taxes. Um, Now, as a business owner, the first thing I would ask you is, do you even know um the taxes that you're supposed to be interacting with, either on a daily basis, weekly basis, monthly basis, or annually? We're here to learn, right? So I'd like to hear you speak because at the end of the day, it's not just for me to come here and, spend the hour just pouring and all that. It makes sense that you interact with me, you understand what I'm saying. I'm able to correct notions that you have if they're not correct, and then amplify or elaborate on what you are getting right. So for starters, my first question to us is, what are the taxes that you're supposed to be interacting with as a business? Any takers? Because I know all the people here, you own businesses, so you can't tell me that you have no clue. Hi. Hey, hey, hey. Okay.
We have
Um,
VAT,
okay.
company tax,
Okay.
um, is it withholding tax now? Withholding tax, I've forgotten that one.
Okay. We're getting somewhere. VAT, withholding tax. Okay.
Sorry, I'm in the
And there are
car with
some
my
in the
handset
chat,
and I'm
staff
typing
and
on my
personal
phone.
income tax. Okay.
Okay.
Then WHT, I think that's the
That's
withholding
withholding
tax.
tax. Yes.
Yeah.
Okay. That's it. Nobody mentioned CIT. Are
Hmm.
you? Which is the tax you are supposed to file annually, your company income tax, after you've done your financial statement and then, done the tax
Oh,
computations where you're liable and then you pay your CIT. Okay. Um, yes. Now we know the taxes, right? When are they due? Your VAT, your WHT, your personal income tax, CIT, when are they due? What day of the month or day of the month of the year? When are they due? Hi, we're here to learn. Okay. VAT returns monthly. Which day of the month is it? I see VAT returns is monthly. CIT is annually. Yes, CIT is annual. VAT return monthly. Which day of the month is it? Okay. Ah, we're getting there. We're getting there. We're getting there. So basically, we see that it's not enough that we are aware that new taxes or new tax laws have been passed or that the tax laws have been modified. It is, first of all, if we even understand what it is, because you cannot apply what you don't understand, right? And that's why we need to first talk about the foundation, lay it properly before we start to build. So today, what we want to do is to lay the foundation and then maybe do a bit of skeletal build, put a skeletal structure on the foundation that we're going to lay. And hopefully, it'll be enough for you to run with it, or, make certain decisions at the end of the day. Let me know if you can see my screen and my slide, please.
yes, we can.
Okay, thank you. Okay, so the first thing that I want to talk about when it comes to the tax laws, right, and why it matters that you understand it is that unlike in time past, where the FIRS had loopholes that you could find a way to maneuver, the system is getting tighter. In fact, as it is right now, it's almost difficult or impossible to maneuver it, right? Because they're becoming digitized. So unlike before where, you could do manual filings and all that, now those things literally don't exist, if I put the word like that. I mean, something as little as your invoicing is now, what's it called? You now have to do it on the platform. FIRS has now created a platform where you create invoicing. And it's not even new because this was first rolled out in 2024. Before, I rush down to where, we're talking about the whole digitization and everything, because I know somebody will say to me, but why small and medium enterprises? The truth of the issue is that um small and medium enterprises, have a bit of reliefs that the government has given to them. But for you to qualify for those relief, the government wants to be sure with beyond reasonable doubt that you qualify, that you are not, you know, claiming to be a small business, but you have actually outgrown the title, right? And of course, with the new laws comes, the digitization, like I mentioned, as well as the automation. So, things like what did I say before? Things like manual filing. So I don't know how, if you are here and you have done business where you have been engaged in filing before, right? You would know that there was a time where you could file your taxes with paper, even though the tax Promax system did exist, right? At the end of the year or at the end of the month, you could still do your filing manually. Which brings me to the question I asked earlier when I said which day of the month is withholding taxes due. And I mean, I could see some people say, oh, they didn't know. So your withholding tax is due on the 20th of every month. So in plain language, if you do deductions in December, you are supposed to file that withholding tax on or before the 20th of January 2026. So you file withholding taxes in arrears. Now, prior to now, because of the allowance for manual, filings, people still found a way to, file in subsequent days. But with the new structure in place, that will be almost non-existent. And that is why it matters that you know these things, you understand how it works, you understand the role that you play in it, and how you need to fit yourself. If the adjustments that you need to make in the business structure that you currently run, you understand it and you apply it quickly. Another tax filing that a lot of businesses don't take seriously, but is actually important, is your pay as you earn, or personal income tax. By law, you're supposed to file that, I think, by the 9th of the subsequent month. So you deducted in January, you're supposed to have filed that deduction with the government by the 9th, I believe, of the subsequent month. But a lot of companies don't take this seriously. And where we're going now, it will be the downfall, of, or the what will bring exposures to a lot of companies. So, please, if you have questions, I'd like you to note it down so that we can have, a holistic conversation at the end, of my presentation. Some of the tax updates that we have seen in the new law that was passed is an increase in reporting thresholds. For example, in the old tax law, the threshold for SMEs was 25 million. The new threshold is 50 million. I know someone whose single invoice, just one invoice, has already surpassed that threshold. Yet the person believes that they're an SME. Now, if you don't know this threshold, you will be shooting yourself in the foot, because you will be playing at a level where the government expects you to have outgrown. The next thing, another update is the digital first compliance. Now, the FIRS is saying that all invoices should be processed through their invoicing platform. It was first rolled out in November 2024, right? And it became compulsory in May 2025 for all companies above the SME threshold. So if you have, if you have a revenue of 50 million 100, 50 million 50 naira, 50 million 1 naira, Once you cross the 50 million threshold, it is expected by now that you have started creating your invoices on the FIRS platform, or you are creating your software, as your accounting software enables you to create an invoice, that is meeting the standard of the FIRS. And what do I mean by that? The FIRS has stated that every VAT invoice must have certain things on the invoice. There are certain codes that are expected to be shown on the invoice. There's a specific number that you must get from the FIRS platform if you're not going to raise it on their platform, and it must be reflected on your invoice, so that at the point of filing your returns month on month, the FIRS can validate the invoice. Now, if you're a company that has surpassed the threshold, but from May till now, you haven't raised your invoice on that platform, or you have not been filing, and showing that your invoice carries those specific characters, then there's no sugarcoating it. You are at a point where your exposure, your risk to FIRS fines and penalties it literally is about to crystallize. Another thing is stricter timelines. Like I mentioned earlier, in the past, because of I don't want to use the word laxity, of the system. It was easier, for you to be able to maneuver. You're supposed to file on the 20th, and maybe we'll say, oh, tax pro max is down, or something will happen. You now say, okay, you file on the 21st, 22nd. With the new law and the systems that they've put in place, is except the system has a glitch, it's almost impossible for you to file after due date. Okay. It's almost impossible for you to file after the due date without being flagged, without getting flagged in the system. And this is why you should know your due dates, know the taxes that are, due on whatever date, whatever period in the year, in the month, in the week. Know the exact, tax rate that is applicable, and do the needful. The days where we could hide, go under the radar of the taxman, they're gone. To buttress this point, even the banks have now been mandated to report transactions. What do I mean? If of course you raise an invoice, except you collect cash. That's where maybe it can be easier for you. But even the cash that you collect, except you only spend cash, then, that's okay. But if your payment will go through any banking platform, you will be flagged. Yes, the CBN has removed the deposit threshold of 5 million and I think 10 million for individuals and businesses. But the banks have been mandated by the CBN to report any transaction that exceeds 5 million per person. So if you do, a business, maybe you don't, you don't go through the proper process of raising the invoice with the FIRS or submitting the invoice, no problem. When they pay you, your bank will help you to alert the FIRS. So one way or the other is a win-win for them. Another thing that has also happened is that with the digitization and all that, it's difficult to backdate your invoices. In the past, manual allowed you to be able to do a bit of maneuvering, but now it's really difficult. Because one of the things the FIRS has stated that they're trying to do is to reduce their operations cost that happens as a result of audits. And so if they're trying to save costs, it means that they would, and they have put the systems in place, they will do everything that they can to make sure that the system works and to make, a scapegoat of anybody that tries to make a mess of their work. So again, it is better to be safe than sorry. Still on the invoicing setup by the FIRS, the platform set up by the FIRS. Of course, as I mentioned, it's electronic invoicing. So the whole point is that you would invoice on the platform. It makes it easy for them to be able to track you, to be able to track your business, to be able to track your invoice, to know if you are compliant or not. Let me also state it clearly here that VAT is not your money. You know, once you are qualified to issue a VAT invoice, yes, your vendor or your client pays you the full amount of money. If they are qualified, they would, of course, deduct the withholding tax that is due. And when I say due, it means that it is either at 5% or at 10%, depending on where you fall in the bracket. Now, when that deduction, let's say they qualify to charge you withholding to do withholding taxes on behalf of the government, right? For hypothetical um um scenario here. For example, you issued an invoice of say 100 million. You fall in the 10% bracket. So they take 10 million off and they pay you 90 million. And in this 90 million is a VAT. It is expected that the VAT portion of that payment, you would remit it to the FIRS. That VAT portion is not your money. It is expected that, it will accumulate. No, not accumulate, because that's withholding tax, I beg your pardon. It is expected that you will pay that money month on month. On the 20th of the month, you would pay the VAT that was paid to you. Now, in a scenario where you don't qualify to issue a VAT invoice, right? Or you qualify, but you didn't even issue any invoice at all. It is also expected that in the month where your filing is due, that you will file a nil VAT, zero VAT. That is to tell the government that this month, though, I did not issue any invoice. Quote and unquote, I did not make any sale. Right? Now, in the past, you could have made a sale and claimed that you didn't make a sale. But with the electronic invoicing that has been set up, where you are supposed to do the needful by creating your invoice on the platform, the FIRS is able to track it. You don't need to speak plenty English. They know when you made payment. They know when you didn't make payment, right? Or when you didn't issue an invoice, rather. And the explanation is not required. They can see it. And automatically, it becomes an audit trail for them and for you. So as much as the FIRS has set up the invoicing platform for them, you can also make it work for you. I have been involved in FIRS audit and LIRS audit, and I can tell you for free that if your I's and your T's are not dotted and crossed, it's not a walk in the park. It's not a walk in the park. For you to go through an audit and come out without a scratch or without, having any, or maybe just a little smack, you must come correct. Your invoices must be clear. Your financial statements must match your bank statement. So if you do the right thing by following, the electronic invoicing, making sure that, your controls are in place and all that, it makes it easy for you. You don't have to do plenty explanation because the facts are there. And it's easy to refer them, back to their platform to check. Another thing I'll say is one of the ways you can make the invoicing platform work for you, I'll give you an example. In the past, input VAT could only be recouped by manufacturing industries. So people who did manufacturing were the only people who could recoup VAT. Now, in the new law, the new dispensation, the government is saying that under, if certain conditions are met, without you being in the manufacturing industry, you can claim input VAT. Everybody knows that to collect money is easy, to pay money is hard. And if you're familiar with the FIRS, you know that the FIRS does not like to pay out money. Anything that requires them to pay out money, the likelihood that an audit will follow is high because they want to make sure that you're not trying to swindle the government. But if you have, with this electronic invoicing, for example, if you've been filing, your invoicing on the platform, doing everything that needs to be done, by the time you file for your input VAT to claim it, there will be no back and forth. There will be no story. Because again, the government is, by law, the FIRS is supposed to pay you, the claim within a certain period of days. But you can't get it within that period of days if they have doubts. How do you make sure they don't have doubts? You do what you need to do from your end. So again, please don't forget, VAT is not your money. It is the FIRS's money. When you issue an invoice and you are paid, pay the FIRS their VAT. Another thing I wanted to mention is this. The VAT tracking, makes it easy for you as well. Because on the platform, if you are, onboarded on the platform and you're filing your taxes and all that as you should, you are able to also tell, which invoice you have paid and which one is outstanding, especially where you issue an invoice and it has not been paid by the client. Because the government does not expect you to pay the invoice to pay the VAT rather for invoices that you have not received credit for. So I will give you an example. Say you issued, you got a brief, you're an interior designer, you got a brief, you've checked the house, you've billed the client, and the client says, okay, you know what, I will pay you in March, right? But you issued the invoice in January. The government does not expect you to make any payment as far as VAT, in fact, any tax rather, is concerned on that invoice until the client pays you in March. So it's easy to track both on your end and on their end. There's no story to it. It's clear there that it is an invoice that has been issued but not yet paid, right? And even if for tax purposes, it's easy to to defend. And like I always say, it's better to I say transparency and integrity is better than explanation. Because when the government has seen your antecedent of, complying over the years, it's easy for you to be able to get off, based on your antecedent. But when your antecedent does not support, your current reality and there's a tax audit on your table, it will be a lot of explanation, even when it's not necessary. Still on, the invoicing matter. And I'm taking time to talk about this invoicing because the FIRS is a big deal to them. And it is important that you understand it. One of the things I had mentioned earlier was the fact that there are certain characteristics that the FIRS expects to be on a VAT invoice. Now, Some people have systems that, makes it easy for them to issue electronic invoices and be able to incorporate the conditions that FIRS has issued when it comes to these electronic invoices. But there are certain entities that maybe, honestly, you're an SME, you're just starting, you might not be able to, have a software that is robust enough to be able to do this, or maybe it can, but you don't even know what it is. One of the things that the FIRS has stated is that every invoice must meet, there's something called the XML and the UBL standard, right? So I created it in Excel. It's not acceptable. I created it in Word document. It's not acceptable. It's PDF, Gaskia. It has to be XML or UBL compliant. If it doesn't meet that format, you are not speaking FIRS's language. They also have a specific, it's called a reference number, right? That reference number must be on your invoice. The reference number is how FIRS confirms that the portal, the invoicing portal, has validated the invoice that you are presenting. So at the point of filing, for example, every month when you file, it is expected that you will, I don't know how you file, but they're supposed to have certain information that you present to the taxman month on month. And one of those information is that reference number, because that's what they check on their end to confirm that the invoice exists and that it is correct. Another thing that they have been doing in the past 6-7 months now and intend to do going forward is that they want to be able to cross-match invoices. What does that mean? So say, for example, you're doing a job with, say, ExxonMobil, right? And ExxonMobil has done a deduction on your behalf and filed it with the FIRS. They have also, filed the invoice that you gave them with FIRS. Now, you as an entity also is believed that you file your own information as a company. From their system, the FIRS wants to be able to match the invoices from on both ends, and it comes out looking the same. Amount, VAT, WHT. They want to be sure that, for example, the WHT that Mobile charged you is correct, right? And they want to be sure that the VAT that you charged on the invoice you have remitted. Another thing I want to maybe correct or put out there for some of us, because a lot of us feel that WHT is just the government taking your money. It's called withholding tax, right? Which is a credit to you. How we work in very layman English. At the end of the year, you've done you've closed your books, you want to file to the FIRS. You now say that, oh, you made a revenue, or you made a profit rather of, say, 100 million. And you're supposed to pay 30% to the government. That's 30 million. But in the course of the year, right, all the different deductions that has been done on your invoice amounted to, say, 50 million. What happens ideally is that you are owing the FIRS 30 million. FIRS is owing you 50 million, because withholding tax is like, let me simply put, is a contribution you make, an ajo, right, that you're supposed to collect at the end of the year. The only difference here is that they don't pay you money. So where the ajo you have done, which is withholding tax, is more than the CIT you're supposed to pay at the end of the year, they roll over the balance for you to the next year. You carry it over to the next year. So let's say the next year you are supposed to pay 30 million, but you only have 10 million with the FIRS. Remember that you have, let's say 10 million in the current year, but you have rolled over 20 million from the prior year. It is clean and clear. You don't pay them, they don't pay you. Let's say in the last year, you rolled over 10 million. This year, you only had withholding tax of 10 million. You only pay the difference of 10 million and everybody goes home happy. So withholding tax, yes, it might bite you a bit in the now, but it's actually something that waits to help you in the future. I hope that that helped, someone. So basically, when I say real-time cross-matching, the FIRS wants to be able to, validate the claims of every party that relates to a transaction and it comes out the same. So of course, if that does not, if it doesn't come out the same, the system will flag it, then there will be questions. And then you might be setting yourself up for an FIRS audit, which I always say is better avoided. Now, having said this, because I mean, I know that a lot of people might be wondering, like, hey, this is a lot. Where do I start? And that's where I'm going as to the common mistakes. The common mistakes that a lot of SMEs, have made in the past, are likely to make now, right? If you don't have an understanding of where we're going or where we're at. The first thing is ignorance. Ignorance was never an excuse, but even now, it's harder. It's harder to feign or actually claim ignorance. And I guess that's why the FIRS is making a lot of noise about the law. So you can't say that you didn't hear. Because if after all the noise they have made, you say you didn't hear, well, then I'm not sure how that will help you. There's also the wrong VAT claim. One of the things I'd mentioned earlier was that on their platform, there are codes. And of course, there's also the reference number. Now, the codes on the platform, allows you to know, for example, if you didn't know that as an SME, or if you don't meet certain threshold, you don't qualify to issue a VAT invoice, then as a small business that has no business with VAT, you might be issuing VAT. You might be issuing, a VAT invoice, which you haven't. In fact, I remember my dry cleaner I'm wondering, like, he sent me an invoice and there was VAT in it. I was confused at first. I had to call him. I said, why are you charging me VAT? How much is your threshold? And I know this person, so that's why I could have this conversation with him. And I said, how much is your turnover? I said, in fact, I didn't even say how much is your turnover. I just said, are you making a turnover as high as this amount? And he was like, no. I said, so you have no business with VAT. Because what happens is this, if you don't qualify to charge VAT and you are not charging VAT, it saves you some headache that, you don't get into. But when as a business that has not, gotten to the VAT threshold, one, you register for VAT. Two, you start charging VAT. Then automatically you encumber yourself with the responsibilities that come with it. So having a clear understanding of where you fall, within the tax bracket, and the allowances that it provides helps you to be able to avoid certain things and make, for example, wrong VAT claims. In fact, I think I read somewhere that one of the I think where the FIRS rather is going is that it will become a penable offense for you to do business with companies that are supposed to be registered for VAT but are not registered. Like they're going there. I don't know how factual that is, but I will not be surprised if that's where they're going. So it's important that we are abreast with what is going on. Don't just be buried in business or trying to do my own is just to do video, Instagram reel and all that and sell. It's beyond that now. Doing business in Nigeria is beyond creating content. I think that's how I'll put it lightly. It's beyond how many likes, how many followers, what is my content calendar? It's way beyond that now. Excuse me. Of course, there's manual invoicing, which I had mentioned before. The likelihood of the inefficiencies, the errors, of course, not meeting the invoice, conditions of the UXL. Forgive me. I hope you remember because I don't even remember it in my head, but you know, excuse me. Meeting the preconditions that the FIS has stated, it's hard to do that following manual invoicing. That's one. Then there's weak controls. Remember when we started, I mentioned that controls will save you a lot. It is before you build, you first lay the foundation. And your controls are the foundations that your company is built on. If for example, your controls for say month-end reconciliations and all that is not proper, checks and balances are not in place to make sure that, so for example, the system is able to flag let's say an invoice that you are closing but have not received payment for, those little things, or an invoice that has been a business that has been done, payment closed, all payments received is still opened in the system. These little things are the things that I talk about when I say weak controls. So it's important that no matter how small your business is, your controls are tight. In fact, it's hard for you to upscale, as a business if your controls are a mess. It's easier for you to, for example, let me say, for somebody who does anything that has to do with inventory, how do you know that it's time to restock? How do you know how much you have sold, how much is left, when last you were restocked, when your reorder quantity, those little things. If you don't have a system in place that is able to take care of that without you having to, be present every time to do it, you cannot upscale. I've mentioned of course, the VAT reform, where, as I said before, there's the increase in threshold, if you meet a certain threshold, you then are beyond, you're no more a small business. You have to, file your VAT at the right rate at a certain time. Of course, there's the invoice matching, like I mentioned earlier. And, I also said that with the new tax law and, the reform of some existing laws, input VAT, before it was just manufacturers who could claim it. But now, whether you are in the manufacturing industry or not, if you meet certain what's it called now, certain criterias, you will be able to claim your input VAT. I'll give you an example. So say as an architect, you had to buy a machine. Maybe they needed you to render in 3D, but you don't have a 3D machine. And so you had to buy a 3D machine because of this particular project. you will be able to claim the input VAT on that purchase because it was, you had to get it by virtue of a contractual agreement. But for you to be able to claim it, like I mentioned, you must have done the needful, filed your on the um on the invoicing platform so that there will be no stories that touch. That, of course, when you do that, it reduces the risk of rejection. Because there are people who could have qualified, but because of, not doing certain things right, they didn't get the input VAT back. Or maybe they got it, but then it took a protracted, conversation back and forth, having to prove that you're supposed to get it, the FRS not thinking so, and all that back and forth before a decision was eventually reached. When you do that, you know, you are able to claim your input VAT seamlessly. Now, what are the traps that SMEs, who don't have like proper structures, and when I say structure, I mean your internal control is weak and all that and all that. What are some of the things that can expose you to penalties as a result of non-compliance? One of it, wrong formats. As I mentioned previously, there is literally, it's like you want to come and marry, this is the bride price, you must pay it. This one cannot be moved, this one cannot be moved, right? You cannot go from A to Z, you have to go ABC. The FIRS has said, this is how we want any taxable invoice to look like. So if you don't know it, of course, the likelihood that you would get it wrong, is there. Poor record keeping, as I'd mentioned earlier, when your control does not allow you, to be able to catch things that it should have flagged, right? That's a likelihood where your records are not clear or, there are inconsistencies. There's that. Your ledger gaps, there's discrepancies, that creates confusion. They cannot understand what you are filing. That's a problem. Your staff, I mean, a lot of these things are a function of human input. So if your staff make mistakes, whether it's invoicing, whether it's, documentation, staff error. And of course, there is unmatched suppliers, when they can't match the invoice with a supplier record. Remember, I'd mentioned that one of the places that I heard is the destination is to make it penable to do business with people who should be but are not registered. These are some of the things, right? And it means that a lot of people who claim to be SMEs but should not be SMEs, will fall into this category. What is the FIRS, doing all this to catch? Transaction trails, variance, and I'd mentioned this cross-party matching. So what do I mean by transaction trail? In the past, for not even now, as we are here, I know that there are people who, for example, should by law have already been doing their invoices on the invoicing platform because they have crossed that threshold, right? But are not doing it. Now, the FIRS is not able to track you, maybe now, as you believe, which I don't believe, but okay. Let's just say it's harder, or it was harder for them to track you. With the new structure that they've put in place and are still building, is getting to a place where it is impossible for you to evade and or avoid them. I mean, cross-party matching will create variance and a variance alert. What does that mean? If there are 5 people involved in a transaction, and say, for example, FIRS can only find 3 of them on their platform, they want to find out where's the remaining part, right? And from what I understand, there's a lot of automation in the process. So the system will automatically flag it. If, for example, the 5 people are all in the system, but the way they have filed it leaves a gap that needs to be explained, the system will flag the variance. So one of the things that the FIRS is doing with the system that they're setting up is they are also using it as a form of data collation. I remember being in one of the webinars that the FIRS did, one of the guys from the FIRS, and he was saying that I think as far back as, is it August or October, they had been able to match invoices of over 14 billion in terms of VAT deductions. And out of that 14 billion, 97% of the 14 billion had been paid. So when the FIS is getting to a place where they have data, they have facts, it helps them to also be able to make laws that is reflective of the realities of people. They're also able to know if truly you are an SME or you are just pretending to be, right? So how do you prepare for compliance? Train your staff, update your controls, make sure that your documentation is crispy clean. Have a structured system that helps you to process your finances in an organized and compliant way. I dare say that it's getting to a point where those who depend on, invoicing apps to do, to issue invoice and pay, I dare say that we're getting to a point where you will not be able to, or except those apps also maybe like evolve, they might become extinct. So I also encourage you to invest in softwares for your business. Yes, the initial cost might, be hard. It might be a lot on the business, but in the long run, it pays you. Which is what, one of the things I was saying when I say like, how would you SMEs will struggle? There's law interpretation, because even for big entities, there's a reason that they contract specialists, because of course you get a lot of interpretation. Even sometimes the tax specialists have to have meetings with the FIRS to be able to understand, some of the laws that they release. How much more, you as a business person who, is struggling with it. Because one of the things I've come to realize, in my experience is that with the law, when it comes to tax, a lot of times it's not black and white. They're usually like sometimes undertones to it, or inferred meanings, or derived what's it called now, interpretations that as a layman you might not be able to get. Of course, system configuration, as you set up systems, you want to make sure that it's configured in a way that it works for you, it helps you, it makes your life easier, it incorporates internal controls, that make it easy for you to be able to run your business seamlessly without going to bed at night and thinking, did I match that invoice? Did I not match that invoice? Has Alaji paid? Has he not paid? Tomorrow I'll check, those kind of things. Then there's the monthly reconciliation, your filings, making sure that your monthly, say for example, your bank reconciliation, you're able to spool your revenue month on month, match it to your bank statement month on month, and see where there are variances that you can quickly correct, right? those kind of things. And of course, um, that is where um, we come in as ZELEL Consulting. We're able to help you, set up your business, set up your system, your monthly reconciliations and all those things, and yeah, we're available to speak to you. But before I talk about the breakdown on this, I want to hear if there's anybody who has questions. Hello. Tell me I've not been speaking to myself in the last
Yeah,
hour.
here.
Okay. Do I have questions, please?
Sisters, this is where to ask questions, especially
Yes, sis. Good evening.
businesses
Good
that are
evening, ma'am.
poorly.
Good evening,
Good evening.
sisters. Thank you so much. And is this the Olori Ada? I cannot recognize you. Thank you so much for your excellent presentation.
Yes, ma'am.
Yes, please. My question now is that you have spoken a lot about companies, but more like people doing supplies, purchases. Now, how does a consultancy firm handle these new tax laws? So maybe, for example, I do consulting. Apologies for the noise. I'm on the way.
Okay.
So perhaps I do consulting for firms on the side, and so I get paid
Mm-hmm.
after this. So I'm not, selling any service. I'm not selling any product. I'm not stocking. Now, but I know they do charge me withholding tax. So from the hospital I deal with, they charge your withholding tax and then they give you the balance. So how does this work in terms of tax and I don't know. Can you?
Okay.
Yes, thank you.
Okay. Okay, sure. So, one of the things I didn't mention is that, in the past, some people did do business and they collect the money in their personal account. As far as the tax man is concerned, as a human being, as a person, you are supposed to file your taxes as TOCI. You are supposed to have a tax ID that you will file your taxes as an individual month on, as in at the end of the year. That's why there's something called personal income tax and there's pay as you earn, right? Pay as you earn is a lingua when you're an employee, your employer will deduct, do the tax deductions and then remit it month on month. Your pay, your personal income tax, you do it at the end of the year. Now, Dr. Erie, when you say that you consult on the side, you are paid money. The tax is not a function of whether you are selling a product or a service. It is the fact that you are earning. And so there's, the tax is due on your earning. As an individual, for example, it is believed that you have had, in the course of the year, you've incurred certain expenses. And honestly, that's where professionals come in because we're able to look through your books and say, oh, okay, this will fall under, for example, let's say you bought a new car in the course of the year and you do consulting. I can look at it and, based on understanding of, the what is surrounding it and say to you, okay, this will qualify as a fixed asset. And so when your books as an individual is, drafted, we then know, oh, did you make a profit in the year? Then you pay the tax that is due, right? Or you didn't make a profit as a person. It is then treated as it should be treated. So it's not a function of whether you registered the business or you didn't register the business, which, by the way, as a way of information as well, the FIS has also partnered with CAC on this matter. So it's not enough that you register the business and then you think you just went under the radar. Or you didn't register it, but you're running business. The bank they will cast you. So basically, whether, it's a product you're selling or a service, as long as you have inflow coming, the taxman expects you that you will pay them what is due them. So as an individual, at the end of this year, your personal income tax is due by the 31st of I think 31st of March or 31st of June. I don't remember that top of head now. But I can come back to you on that. As an individual, you are supposed to file your taxes. As an entity, you also file taxes.
Okay. Okay, sorry. Perhaps you didn't get my question right. Well, so
Okay.
my question is, so if I'm doing the consultancy and
Yeah.
the money is being paid to my company, but the
Yeah.
company is earning less than 50 million. So
Yeah.
according to these new tax laws, I think that means you are exempt. So my question is, however, whenever I do the consultancies, I'm being charged a withholding tax.
Yeah.
There was a point where you were talking about at the
Yeah.
end of the year that withholding tax
But
is kind of
it's
like an
okay.
add-on
Yeah.
and
Yeah.
stuff
It's still
like
a
that.
credit
So
for
my
you.
question now is, yes,
It's still a credit for
okay.
you.
So
It's a credit for
I
you.
don't have any extra taxes to pay
No.
once you are below the 50 million,
Once you are
right?
below the threshold, right? And the threshold is
Yes,
100 million. No, sorry, 50 million. It was 25
million
million.
in
Now it's
annual
50
per
million.
annum.
Yes. Yes. That's your
Okay. But
turnover.
I have to file those invoices, right?
Yes. So
Every month or every time I'm paid.
yes. So like I said, file it beyond,
Okay.
meeting threshold or no threshold. What the government is also doing and what the FRS is helping the government to do is to collect data so that they are able to
Okay.
tell when you cross the threshold. You are not the one that will inform them. The system will
Mm,
already migrate you that this person has crossed the threshold. It's
okay.
automated. Yes.
Okay. So
Right,
beyond
ma'am.
once I get my money, I do the necessary filing, uploading
Yeah.
on the tax form platform, I'm
Yeah.
good to go, right? I just
Yes.
hope not to fall. Okay. Thank you very much.
Exactly. Yes, yeah. But also
Thank
note that
Okay.
because you are not within the threshold, you don't qualify to charge VAT.
Okay.
Yes, you don't
Okay.
qualify to charge VAT, but they will do deductions on your behalf because they are expected to as an entity.
Yeah, and that
Mm.
deduction is a withholding tax.
Yes,
So
and it's a
thank you very much.
credit to
Okay, so
you.
I'm good.
Yes.
Okay.
Okay.
Thank you.
I see Marian wants his hand is up.
Good evening, sisters.
Good evening, ma'am.
Good evening, my tax consultant.
Good evening, ma'am. How are you?
Okay, so I'm well. Okay, my question is this. I know that you know that I am guilty in any case, but um, I'm actually an SME,
Okay.
right? But with all that is going on, I'm beginning to think, am I really an SME?
Okay.
Because I've had sleepless nights for the last 1 month.
Okay.
So my question is, how do I know for sure that I'm not an SME?
Okay.
Considering the fact that my volumes are large, but my profits, we can't say that my profits is, I won't say my profit is beyond an SME,
Okay.
but the volume of what comes in um, is beyond an SME.
Okay.
So how do I place myself?
Okay. Okay. Just to clarify, right? The threshold is not on your profit, it's on your turnover. So if you and I mean turnover, of course, it includes or everything, both your profits, your cost, and all that. So if you in a year, right, you have issued your turnover, I mean, by virtue of the what's it called now? The invoices that you have issued and all has exceeded 50 million. You are not an SME, ma. You are only an SME if your turnover is below 50 million. Once you click 50 million and 1 naira turnover, not profit, you have graduated. Now,
Sorry, please, just a quick one. So you're saying that once your turnover is above 50 million, not an SME.
yes,
But
ma'am.
I'm operating as a business name.
Mm-hmm.
So how do they move me because I'm not a limited liability company, right? Because I actually changed my company name to a business name to be able to be below, to be able to enjoy the tax laws of before.
Okay.
Now, I'm now a business name, but my turnover is about 500 million, right? How do I move from, because I'm a business name, so how do you say I'm not an SME?
That's what I'm saying, that the law is not a function of name or no name. That threshold is attached to your turnover, not your business name. You know, before, some people, instead of being a limited liability, they operated on sole proprietorship because they wanted to enjoy certain things. Which is part of the things that, the tax laws are constantly being rejigged to pull more people honestly into the net, to also give relief to people who, even though they're doing business, they really are struggling. So, for example, a company might have existed for, as I think Marianne is dropped. A company might have existed for as long as, say, 10, 15 years. But in all honesty, they have not crossed that threshold because they are struggling. There's a reason the government moved the threshold from 10 million, from 25 million rather, to 50 million. Before 25 million, I think they were at the 10 million threshold. So every time what the government is doing is sitting at a round table, doing an analysis based on current economic realities. How do we help the people? How do we make it easier for those who are doing business to survive, to thrive? And I'm sure that's why they went from 25 to 50 million, because that's a very wide gap. Excuse me. And what that has also done is that it has also allowed some people to get into what's it called, back into the SME bracket. So there were people who had crossed, the 25 million threshold, and were no longer in that, relief space. But because of the increase, they have now come back, into that space of being able to enjoy certain reliefs. Another thing that I didn't mention is that if you have it is 50 million in turnover and 250 million in assets. So again, as much as the government wants to help you, they want to make sure that they're not shooting themselves in the foot. So basically, you are not an SME by virtue of your business name or your memorandum of article. It is where you fall in the tax brackets. That's how FIRS, as far as FIRS is concerned, that's where they wait for you. Are you in this bracket? If you're in this bracket, are you doing what is expected of you for people who fall in that bracket? I hope that helped. Is Marian back? Yes, she is. Do I have any more questions, sisters?
Yes, please. So,
Last
I
question.
have a business. It's not even business name. I have a registered business.
Okay.
But for some time now, I have not been issuing invoices. I think I've only issued one invoice in the business name. I've been issuing invoices in my personal name and receiving payments in my personal account.
I don't know.
So, what am I supposed to do at this point to regularize things?
So, you see, when they say don't mix business with pleasure, this is an example. So, because ideally, right, let's say, let's say your business is called Babatunde Consult, right? As far as FIS is concerned, Babatunde Consult is a different entity from Olamitoyosi Babatunde. They're two different people as far as the taxman is concerned. Now, you have successfully married them. At the point of filing your taxes, because you're supposed to file the taxes for the separate entities. You as a person, Babatunde Consult as a business. Now, because of the what's it called, the way it is, it's difficult for you to now tell the tax guy that actually it's a business that I did, it's a business, actually it's for business. You would have to bear the brunt of doing the computation. If they check it for you and they see that, okay, based on the analysis, because I mean, a statement of a financial statement will be done for you as a person. If it is deemed that you made money at the end of the year, even though technically it's supposed to be, for Babatunde Consult, you will pay the taxes that are due it. That's why we always advise people to make sure that there's a very clear line between you as a person and your business. It's because of this kind of things. Maybe what can also happen is that I can spare, say, 20 minutes of my time sometime next week to have a conversation with you about it.
I appreciate that. Thank you so much.
Anna's iPhone, I think that's the last question I'll take.
Okay, yes. So good evening. Thank you very much. So a couple of questions. First of all, you keep saying turnover. What is turnover?
Okay.
Secondly, you've already explained that what the FIRS looks at is your turnover.
Yeah.
However, when the tax is being calculated, is it calculated on the turnover or on the profits? So just for you to explain that.
Okay. So your turnover as a business is your total revenue. Your total revenue is the total sales you made in the year before any deduction. Right? So if you issued 5 invoices and the total of the 5 invoices rather, was, say, 25 million, your turnover for the year is 25 million and you fall within the threshold. If your 5 invoices amounted to 51 million, your turnover for the year is 51 million and you have exceeded the threshold. That's one. In your turnover, that's where VAT comes to play. That's where WHT comes to play, which is withholding tax. Because when you issue an invoice, say for example, if TZELEL Consulting issues an invoice to Graffiti, right? Graffiti will charge me withholding tax and pay that withholding tax to the government on my behalf, right? The VAT, if I qualify to charge VAT, the VAT that I charged on that invoice, I would remit it in the year, in the month following to the FIRS, right? And that's all within the turnover space. Now, at the end of the year, when you do your financials, you close your books, you do your financial statements, it is audited, and you come to it. It is at that point that it is determined whether you made a profit or a loss. If you made a profit, company income tax or PIT, personal income tax, then comes to play as an individual and as a company. Company income tax is 30%. If you make profit, 30% is charged on the profit amount. That's just one of the taxes, by the way. There's development levy, there's education levy, and all that. But for the sake of this presentation, let's focus on CIT. Now, if you are due to pay 30% because you made a profit, but in the course of the year, withholding taxes have been deducted on your behalf and credited. When you get to the taxman's table, it now becomes, do you pay to balance up, or do you roll over, or is it a square if it squares out rather. So it squares out where what you are supposed to pay as CIT is the same amount that was deducted as withholding, which is a very rare occurrence. You have to pay to balance up if the amount that was deducted as withholding tax in the course of the year does not amount to your CIT. You roll over when the CIT, that you're supposed to pay is less than the withholding tax that was deducted on your behalf in the course of the year. So company income tax is associated with profit or loss. Withholding tax, VAT, is a revenue, sales, or invoicing business. I hope that clarifies. Hello, Anna, does that clarify?
Yes, it does. Thank you.
Thank you. Yeah.
At this point, we need to say a big thank you to our consultants. Anyone who did not join this call has missed a lot, trust me. So let's go into the comments box, to the chat box, and say thank you. Let's show our appreciation. Go into the comments, type in something, use the reaction button to give her kudos, clap for her, celebrate her, show her your love. I'm not seeing our reactions. Thank you, Marianne. Anybody else? Thank you, Esther. Yes. Have you learned something? Definitely. I am sure that every single person here has learned, whether your turnover is above or below the threshold. You know that everyone is affected. So if before now you thought it is only those who have businesses that are affected, now you know that even as an individual, you are affected in one way or the other as long as you earn money. Thank you very much, TZELEL Consulting, for giving us your time. And thank you for what you will still do for many of us after this call. God bless you.
So basically, I'm willing to give 20 minutes to the first 5 people who reach out to me post the
I'm
meeting.
number one.
Yeah, so 4 more
I'm
people.
number one.
So just hear where you're at and how I can, shed more light. And then after that, I will send you my invoice.
No problem.
All right.
Thank you so much.
With my absolute pleasure.
To be uploaded on YouTube for us to watch, to learn, because I'm sure it's something that we'll want to come back to again and again. Once the link is up, will let us know. It would be nice to also share with other sisters. Thank you. God bless you. Enjoy the rest of your evening and see you in 2026.
Yes.
So on behalf of the education team, this is me signing out. My name is Olamitoyosi Babatunde. I'm a member of the education team in TOCI. And in 2026, we hope to bring you more amazing, impactful, and enlightening sessions. Bye for now.